What's good, YouTube? Welcome back to my YouTube channel, Smart Money Rich here. And if you're just seeing me for the very first time, my name is Smart Money Rich. I'm a Forex trader, a mentor, and a coach, guys. Today, I'll be teaching you guys about interest rates. That's the topic we'll be talking about today. So if you love a video like this, make sure you click the like button, subscribe, and turn on the notification bell. Here are the topics we'll be talking about today, guys. We'll be talking about interest rates and understanding of interest rates, how to use interest rates in your trading. Okay, guys. So I will teaching you guys fundamental analysis about interest rate. Let's go straight to the video right now. All right, guys, so here we are on the topic for today. So today we'll be talking about interest rates in forex trading. The contents are going to be: what is interest rates, why do interest rates matters to currency traders like you and myself, and we'll also be talking about why cut or hike interest rates. So this is about the central banks. Why do the central banks cut or hike interest rates of an economy? And after that, the fourth thing, we are going to be talking about how to trade interest rate, because you can actually take advantage of interest rates of an economy. So we are still on the fundamental series right now, and today's topic is talking about interest rates. Now, if you like videos like this, make sure to subscribe, click the like button, and turn on the notification bell so that more other videos will come your way, because I'll be releasing other videos after this one. I'll be releasing inflation, GDP growth, in fact everything about fundamental I'll be giving you guys totally for free. So make sure you subscribe to my YouTube channel. So all right, let's move on to the first topic. What is interest rate? What is an interest rate? Now this is the first topic that we will be treating, because you definitely need to understand what an interest rate actually is, right? An interest rate, it's either the cost of borrowing money or the reward for saving it, usually an annual basis. So for example, when you borrow money from a bank to buy a house, if you're lending money to someone, you want this rate to be higher, okay, so that you collect more interest. And if you are borrowing money, you want this rate to be lower, so you pay less. So this has to be about the central bank's decisions, because you as an individual, you can't borrow money directly from the central banks. You're definitely going to borrow money from the commercial banks. You understand, guys? The commercial banks are like your normal day-to-day banks. You understand? Now this is how the interest rates affects the economy. Okay, now interest rates is the cost of borrowing money. Let's say, for example, if interest rates of your economy or your country is currently sitting at 3%, and you get to borrow $5,000, for example, you borrowed $5,000 from your bank. Now you'll be paying an interest of 3%. Whatsoever amount you borrowed from the bank, that's the amount of interest you will be paying, right? So now people actually borrow money from banks to run their businesses. People actually borrow money from banks to finance their companies. People actually get money from banks for a lot of things, you know. And when the interest rate is higher, it attracts a lot of investors, because investors want to make a good amount of interest on whatsoever money they are investing into that country or that economy. You understand? So the higher the interest rate, it helps the economy to boom or to attract more investors. And you also, if you are a lender, you get to make some certain amount of profit when you lend your money to people. Let's say, for example, you as an individual, you can also be a lender, someone that is lending out money to people by saving it in your bank account. So in Nigeria here, we call it a savings account. This is a place where you can put money and you will not touch the money for any reasons. They will be using that money to borrow individuals, and those individuals will be paying interest on that money they borrowed. And when they pay the interest to the bank, the bank will be putting this money, the interest to your money. You understand? So that's the amount of money you make for lending your money out to people. Do you understand? So that's what an interest rate is. And this also affects the economy, because if you are a lender, you want to make more interest on the money you're lending out. So let's say, for example, country A interest rate is 1%, country B interest rate is 5%. Where do you think people will want to go and invest their money? People will want to go where they will make 5% on interest, instead of going to an economy where they will make 1% of interest. Okay, so that's what an interest rate is. Let's move on to the next topic, guys. All right, so here is the second topic. We'll be talking about why do interest rate matters to currency traders. So a lot of people might be saying or thinking to themselves, what business do I really have with interest rates? What business do I really have with the central bank's policy? Now, interest rates affects the currency movement. Do you understand? So let's dive straight into why interest rate matters to traders. Interest rates are a direct reflection of a central bank's economic outlook. Usually, if things are healthy in an economy, we see rates rising or being hiked. If things are healthy in an economy, the interest rates will continue to rise. The central banks will continue to hike interest rates if the economy is doing well, if the economy is booming. Do you understand? Conversely, if things are declining or recession worries are mounting, we may see interest rates being cut. All right, let me break it down. So if an economy is doing very well, it simply means that there are a lot of employed people who are working, who are receiving salary, so they are spending money. You understand? An economy is doing great. They are spending money. They can buy whatsoever they want. What usually happens is that there is a lot of money in that economy. So what happens if the central banks allows this to continue, this will lead to a high inflation. It will cause a high inflation. So now this causes the central banks to look into the economy and make sure that they step in and take some necessary actions, and they take these actions by increasing or hiking their interest rate. So when they hike their interest rate, it makes it more difficult for individuals, company, restaurants, or people to go and borrow money, because they will be paying more interest than usual. If they used to pay 2% of interest, now they will be paying up to 4 or 5% of interest. Do you understand? So conversely, if things are being bad for an economy, you understand, they might want to cut interest so that they can attract more people to come and borrow money for the economy to keep working. Because if the interest rate is high, right, people will not be borrowing money anymore. Instead, they will start to sack people so they can manage the funds that they have. But if things become bad, they will now cut interest rate to go down. If it was around 3%, they will now cut it to 2% so that people can borrow money. Because when people borrow money, they tend to spend money because they are paying less interest on the money that they borrow. This is the major reason why traders need to care about interest rates, and I have just simplified interest rate in this video. If you're enjoying the video so far, make sure to leave a thumbs up, turn on the notification bell, and subscribe to my YouTube channel. Let's go to the next topic, guys. Why cut or hike interest rates? So why do the central banks cut, or why do the central banks hike interest rate? So if a country is expecting a recession, period of decline, when things are not going well, things are going bad, if an economy is experiencing a recession or a period of decline, it is important that a central bank attempts to stimulate the economy. During these times, we usually see very low level of inflation or even deflation, right? This is a topic for the next video, so we'll be talking about inflation in our next video, right? So in this case, a central bank may elect to cut rates in their central banks. Do you understand? Now you see, due to high interest that is on the amount of money that people will borrow from the bank, people will stop borrowing. And once people stop borrowing, they will not be able to do their businesses the way they were supposed to. Do you understand? And this will affect the staffs. It will affect the economy. Now, people will stop spending and they will try to manage the amount of money they have. So now the economy will start to experience decline, and recession might be a threat to the economy. So what the central banks will do to keep the economy going is to cut interest rates so that people can start borrowing money, spending money, and employ more workers. This is the major reason why we see federal Fed central banks cut or hike interest rates. So let's move on to the next video, guys. All right, guys, so what I have on my screen right here is a tool that I use in monitoring interest rate. So if you look at the tool very well, you'll see we have the country, we have United States, we have China, we have the Euros area, we have the Germany, Japan, India. Now, if you look at the top, you'll see we have GDP growth, interest rate, inflation, jobless rate. These are all the things you need to look out for, and I currently have a video on all of these, guys. Check my YouTube channel. You're gonna see a video on GDP growth, interest rate, inflation, and jobless rate, meaning unemployment and NFP. Now, if you see the United States, their interest rate is currently sitting at 3.7%. Why the Chinese interest rate, the China is currently at 3%, but the Euro area is 2.15%. It means that the United States interest rate is still way more higher than China, Euro, Germany, Japan. It is only India that is higher than the United States because their interest rate is currently sitting at 5.25%, which is actually too bad for an economy, because the individual over there, they might be finding it very, very difficult for them to be able to borrow money and go about their businesses. Okay, guys, so this is a simple tool that I use in checking all of this out, the GDP growth, interest rate, inflation, and jobless rate. So stay tuned for more videos, because I'll be teaching you guys how to get this tool and how to use it, because fundamental can be a bit very difficult. That's why you see a lot of people, they just ignore it totally. But with this simple tool, you don't need to ignore fundamental. You can easily come here and know the GDP growth, the interest rate, the inflation rate, the jobless rate, just by looking at the numbers of each of these countries, and then you know which currency to buy and which currency to sell. All right, guys, so this is the final video. How do we trade it? I know this is a video that a lot of you guys have been waiting for. You want to know how to trade it. Yeah, definitely, you definitely need to know how to trade interest rates. It's pretty simple, because I think I have simplified what interest rate is already, and when you move on to your charts, you should be able to know it off head, trust me. So if you know a central bank is raising rates or likely to, this is usually a bullish fundamental outlook for the currency of the country. So let's say you've been listening to the Fed chairman, Jerome Powell, and Jerome Powell is sounding as if he is looking to raise interest rates. That's likely a bullish momentum or a bullish fundamental outlook for the dollar or for that country, even if it is not the US, right? If you know a central bank is cutting rate or likely to, this is usually a bearish fundamental outlook for the currency of the country. So if the Fed or the central bank chairman are looking to cut interest rate, definitely this is bad for an economy because investors will run away and everything will start to decline again, right? So remember, as a lender, you want the most interest you can get for your money. And so do all the major investors and traders in Forex. Everybody wants to make a major percent for the money they are lending out. A higher interest rate can attract foreign investment, causing the currency to gain value, right? A higher interest rate can attract foreign investment, causing the currency to gain value. So how do you trade these interest rates that we are currently talking about, guys? Now, interest rates sometimes, when you listen to the Jerome Powell, all you have to do is pay attention to what this guy have to say, and you know the direction that the currency is currently going. So let's say, for example, if I want to trade Euro USD, I have to look at their interest rates, right? I have to look at how the economy is doing, because how the economy growth is going contributes to the strength and weakness of the country's currency. So let's say if I'm looking at Euro USD, I'll have to look at their interest rate. I'll look at the United States interest rate to know which interest rate might likely attract investors and the interest rate that will make investors to run away. So now if the US dollar is more positive, raising interest rates, and the ECBs, the Eurozone, they are cutting interest rate, then that's a bullish for US dollar. It simply means that Euro USD is going to be what? Is going to sell off because dollar will be stronger than the euro and euro will be weaker than the dollar. So when you're looking into an economy, interest rate is very, very important that you pay attention to it. So that will be all for this video, guys. If you've actually enjoyed this video, make sure to like, subscribe, and turn on the notification bell. Thank you, guys. Peace out. All right, traders, so if you actually enjoyed the video, make sure to turn on the notification bell and subscribe, right? There are a lot of other fundamental analysis video that I'll be dropping very, very soon, so make sure you watch out for it. And don't forget to check the link in my description. There are a lot of links in the description that can actually help you, right? I have a free Telegram community for someone like you. You can join, take my signals for free, learn directly from me. I do an online classes in my free Telegram community, totally free. You don't need to pay any money. And also, if you want to reach out to me, you can follow me up on Instagram, Twitter, or reach out to me on my my TikTok, link in description. Also, make sure to sign up with Access Market. Access Market is my recommended broker. They are the best, and whenever you sign up with Access Market, they give you a 50% on your first deposit. So what does this mean? This simply means that whenever you sign up using Access Market gives you 50% deposit bonus. If you deposit a $1,000, they are going to give you 50% of that deposit, right? So what are you waiting for? Sign up with Access Market today and start trading. Okay, make sure to check the description. You can also check the description and use the website. I'll see you guys again in my next video. Peace out.